This is Daybreak Asia. We're counting down to Asia's major market opens.
And of course, a lot to contend with, despite this, of course, still being quite a holiday-thin trading week. We've got Japan. Those numbers are quite surprising, slipping into recession. Certainly clouds the way forward for the Bank of Japan, particularly with how strong the yen has been. And of course, we're also kind of looking across the continued percolation of Fed messaging and how that sort of side of things continues to affect markets. We're seeing a bit more of an uplift today.
Yeah, Japan's an interesting one though, isn't it? Those numbers most unexpected, and we of course got inflation as well. So was this stagflation, or are we really doing violence to the word there? A lot of earnings out of Australia as well.
Yeah, and some of those earnings, you know, despite being pretty good news stories, being clouded by the broader kind of macro outlook and some of these concerns over the Fed's trajectory, right? But let's get you straight to the start of trading in Japan. Ahead of that, we do have some more breaking numbers out of Singapore at the moment. We're seeing GDP numbers for Singapore coming in at 1.2%. This is again slightly softer on the headline as well. 1.2% seasonally adjusted quarter on quarter. Expectations were for 1.4%, and also certainly easing quite significantly from the 1.7% in the prior reading. Year on year, the headline GDP number at 2.2%. That is a miss on expectations of 2.5%. These, I should point out, are the fourth quarter final readings, and quite a pullback, I should mention, from the previous period that we've seen as well. The annual GDP year on year, they're coming in at 1.1%. That was for the full year of 2023, at least in line with expectations, but also a little bit of a softening there. And we have seen some signs of sort of weakness over the past year. There's been some hope from the Prime Minister that we've heard recently, hoping that the strength of the recovery across industries like construction and retail services will kind of help support the broader economic recovery there. But let's get you to how we're seeing trading in Japan just in the first few minutes or so of trading this, as we continue to process the data showing that Japan's economy unexpectedly contracted for a second quarter at the end of 2023. That, of course, meaning that it slipped into recession. This is the first two straight quarters of slippage that we've seen since 2018, and that really does create some questions as to how the Bank of Japan times that potential first rate increase, the end of negative rates, and that's also being complicated by the weakness that we've seen in the yen as well, right? Do it earlier and we might see a little bit more support for the yen. But GDP shrinking at an annualized pace of 0.4% in the last 3 months. We had that revised 3.5% contraction in the previous quarter. So also, I should mention, Japan's economy then slipping to the fourth largest in the world, just behind Germany now. All that being said, we are still seeing some pretty reasonable gains there for the Nikkei 225, up by about 0.7%. We're still a couple of percent away from getting to that December 1989 high, so we probably won't be hitting that in this session at least, and dollar yen holding pretty steady at that 150 level. Taking a look at Korea as well, because of course this has in a lot of ways been the strongest stock story, almost more than the rally that we've seen, of course, in Japan. And that's really been on account of the turnaround, like going from Asia's worst performing market to really the best on a lot of these hopes on regulatory reforms, local regulatory reforms, and driven by inflows from overseas investors. The equity benchmark for Korea has now become Asia's best performing gauge this month. More than $4 billion of local shares being scooped up by global investors in Korea.
There's plenty going on in markets today. Let's take a look at how we're tracking here in Australia. The broader ASX better by about 0.9% right now. Real mixed bag though. Just to give you a couple of examples. The world's biggest mining company, BHP, not having a great day, off by 1.25% right now. This is after posting a $2.5 billion impairment charge on its nickel assets. We have, of course, seen a little bit of weakness for nickel prices. A couple of other big movers, though. Wesfarmers, Origin, both reporting very strong earnings reports, so they're both higher in the early going here. We've seen the Aussie dollar slipping a little off the pace, 65 cents US at the moment. Of course, at the bottom of the hour, we're going to be bringing you jobs data out of Australia. If it hits 4%, that would equal a 2-year high. Looking at crude prices as well, they've backed off a little. US crude inventories have risen by a bit more than expected, 12 million barrels. That's the most since November. Standard Chartered, meanwhile, has been saying fundamentals point to Brent exceeding $90 a barrel on tightening supply and geopolitical risk. Let's take a look at US Treasuries as well. Not a lot of movement, a slight decline in yields. We did hear from Austin Goolsbee a bit earlier from the Chicago Fed, talking about those CPI numbers that we saw out of the US a bit earlier. He said, look, slightly higher inflation data for a few months. Don't worry about it. That is still consistent with the central bank's goal. All right, let's get to our next guest, Vasu Menon. He is Managing Director of Investment Strategy at OCBC Bank. Vasu, I want to start us off in Japan, if we can. We've just had those rather disappointing GDP numbers. I know you're quite bullish on the Japan rally. A lot of it's been fueled by the weak yen. Do you think that the rally in Japanese stocks has still got some gas in the tank?
We think there is more upside for the Japanese stock market. In fact, the way the Nikkei is responding to the GDP numbers this morning, it's up. It seems to be a case of bad news being good news. The weaker than expected economy has given rise to hopes that perhaps the Bank of Japan will not increase interest rates in any significant way this year, even if it does once or twice. It will not do anything as aggressive as the Fed did, and that is seen as a positive, a tailwind for Japanese equities. But more than that, I think you have significant corporate governance reforms has taken place in Japan over the last several years. Of course, the weaker yen, the easier monetary policy, the decent corporate earnings, the undemanding valuations, put all that together, still makes a case for more upside for Japanese equities, which are relatively underowned compared to US equities.
Just want to get a little more on your thoughts about the next move for the Bank of Japan, because that weak GDP read, to what degree has that thrown a spanner in the works for the normalization of policy in March or April?
Well, it is still possible that the Bank of Japan could lift interest rates in April. That's our base case scenario at this juncture. I don't think that derails. I don't think the latest GDP numbers derail their expectations. But don't expect the BOJ to do what the Fed and the ECB and the BOE did. In other words, continue to increase interest rates in a consecutive fashion. I think they will hike rates once, or they will adjust their rates once, a normalized policy to a limited extent, and then wait and watch. Because Japan has been mired in deflation for a long time. And I think the BOJ will be careful in the way it moves. He'll tread cautiously. And it's quite clear that, the Deputy Governor of the Bank of Japan said recently, in fact, last week, he said that, monetary policy will remain accommodative even if they normalize policy, implying that rate hikes will not be significant, even if they do happen anytime soon.
Vasu, what about China as we start to see, obviously, Hong Kong back online, China coming back online as well after the Lunar New Year holidays? Do you see prospects for more stimulus and policymakers actually delivering what investors have been asking for?
Well, that's a tall order. I mean, the policymakers have been announcing piecemeal stimulus measures. It's quite clear that Xi Jinping is getting more involved, in the economic management of the country. And you have the NPC that's coming up fairly soon. That means that, probably China is going to have more stimulus down the road. You'll see more stimulus on the cards. But the big question is whether they'll do the bazooka, the big bang, something very significant that will provide a backstop, put a floor on the ailing property market. I think that's critical because without the property market stabilizing, I think it's hard to see the Chinese stock market rebound in a sustainable, significant fashion.
So that's a positive watch. What about the US at the moment? Do you think valuations are too high given some of the concerns over just how much easing the Fed is going to deliver?
Well, if you look at the overall valuations, they seem high, but that's partly because technology stocks have done extremely well. They form a big component of the S&P 500 index and some of the other major US indices. So if you take away the technology sector, then the valuations are not as high. But even then, I think the technology story is intact, and we think that AI is here to stay. Will continue for several years. And so we see more upside for US equities. We are neutral on US equities. We are more positive in Japan. It's clearly more owned than Japanese equities. But having said that, the Fed will take the lead in cutting rates. And, the US market is, after all, a major stock market in the world. Global fund managers are cash rich. Individual investors are cash rich. And, so money will gravitate towards the largest stock market in the world in one way or another as interest rates come down.
So that sounds like a bullish outlook, but you still see a mild recession in 2024. Why is that?
We see a potential for a mild recession in 2024, possibly in the second half of this year for the US, because interest rates have increased significantly, Paul. I mean, they've gone up by more than 5% since March of 2022. And historically, that sort of sharp increase in interest rates, does have an impact on the economy. Not seen that happen just yet, but we think that it could happen. But the positive takeaway is that it's going to be a mild recession because the corporate sector, consumers and households have strong balance sheets. So put all that together, economy won't fall off the cliff, but it will still slow down, possibly slip into negative territory, but then it'll come out of it fairly quickly. And we don't think that's a game stopper, a game changer for equity investors as far as US equities are concerned.
Vasu, always great to chat with you, Vasu Menon, Managing Director at OCBC Bank. Let's get you a quick check of some of the movers that we're watching early, just about 10 minutes into the start of cash trading. Japan's Renesas, this is a semiconductor maker, of course, trading a little bit softer, in fact, 3.3% lower there. They'd agreed to buy the design software firm Altium for $5.9 billion US. This is a 34% premium to the last share price. And this is a Sydney-listed design software firm that's actually based in San Diego. So they'll be acquiring shares of Altium for that cash price of 68.50 Aussie dollars a piece to be financed by bank loans and cash. We are also watching Sony, which has just started to see a little bit of a move there. We're seeing Sony preparing to partially spin off its financial unit in October 2025. We're seeing shares not reacting particularly kindly to that 7.5% lower. This is a part of the broader focus plan on the growth of its other businesses, entertainment and image censoring as a priority businesses. So the company is essentially reversing course after taking the unit private back in 2020. But they're also concerned about these underwhelming PlayStation 5 sales, and that led to the outlook cut. We're seeing that stock under pressure today.
All right, we've got a big mover to look at in South Korea. Kakao, the online news, entertainment, leisure portal, up by 11% now. This is on a very strong fourth quarter earnings report. Operating profit 189 billion won. That was about 40 billion won more than expected. Sales were a slight miss, but the portal business revenue, that also declined slightly. Game revenue kind of flat, but music revenue up very strongly, up by more than 100%. So a strong earnings report there from Kakao. Let's take a look at Rakuten as well. Shares there jumping more than 11%. Rakuten boosting its full year net income guidance. The new forecast beat the average analyst estimate. Third quarter net income, meanwhile, 79% of initial full year guidance. So Rakuten shares are responding very positively there. Still to come, Donald Trump said to be considering scaled back commitments to some NATO members if he gets re-elected. We'll have more on that story later in the hour. But first, Defence Minister Prabowo Subianto looks set to become Indonesia's next president. We'll have an update next, live from Jakarta. This is Bloomberg.
Reserve Bank of Australia Governor Michelle Bullock says rate cuts overseas will have implications for RBA policy in a Senate testimony today. Let's bring out economics reporter Swati Pandey. Join us now. It's a treat, and I guess this is a new normal to have so much communication from the RBA head. What was most interesting for you?
So this Senate appearance was just right a week after Michelle's longer parliamentary appearance. That one went on for 3 hours. This one was shorter. It also involved smaller parties, so the questions were quite obscure, and they were asking her questions about the government's tax cuts, about price gouging by companies, and whether that is responsible for inflation. There were a lot of questions about what's happening overseas, and Michelle reiterated that services inflation remains a worry, even though we are seeing a big fall in goods inflation. So she did try to reiterate that hawkish message as well.
Of course, a lot of what happens is beyond the control of the RBA. What did she have to say about some of those overseas countries that are easing policy and particularly growth outlook in China?
So she actually thought it was good for Australia's economy if countries overseas are cutting interest rates, because that pushes the Australian dollar relatively higher, which is positive for inflationary outcome for Australia. So she was actually, she said we are looking at what other countries are doing. We are looking at inflationary trends overseas. And she believes that Australia is also seeing similar trends as US, for example, where goods inflation has come off, but services is taking longer. So I think she kind of signaled that they would really follow and look closely at what the Fed would do and then act from there.
How closely are they watching China, given, I mean, historically, such a close correlated economy? Australia has actually done pretty well.
That's true. There was not a lot of discussion around China, but Bullock did mention that with China's economy slowing down, that on paper, that does have implication for Australia, but China has actually been buying a lot of Australia's iron ore, coal. In fact, there was data out recently which showed after the barley tariffs were removed, China became the top buyer of Australian barley as well. So we have actually benefited from China's demand and the fact that China is continuing to pay top dollar for Australian goods. So another trade surplus, yes, but another budget surplus likely too.
All right, economics reporter Swati Pandey there. Indonesia's Defence Minister Prabowo Subianto has declared victory in presidential elections. Unofficial tallies show the former general securing nearly 60% of votes, and that's putting him on course to lead Southeast Asia's largest economy. Our chief international correspondent for Southeast Asia, as Linda Amin joins us now from Jakarta.
That's right. Indonesia on the cusp of a new president, an ex-general with a checkered past, now about to take power. Let's join my partner in crime, who was also at Prabowo's victory party, Faris Mokhtar, our correspondent here in Jakarta. It was quite an interesting take. The tone, the speech, the messaging, what stood out?
It was, you rightly pointed, all those points out, House, because, as compared to 2019, when he lost to Jokowi, he had prematurely declared victory. He was fiery. He threatened social unrest, calling on his supporters to take to the streets. But last night, it was a completely different Prabowo. He told his supporters they need to stay humble. Do not be arrogant. He promised to defend and protect all Indonesians, including those who didn't vote for him, and also, he talked about how the country has got to come together. He didn't prematurely declare his victory. Instead, he was really measured and calm, waited till almost 100% of the votes have been counted. It was really a stark change.
He was presidential. But the thing is, we have seen the real Prabowo. In the 75 days of campaigning, he reined in the real Prabowo, but we saw glimpses of that. You got to wonder which Prabowo would emerge as the president.
And I think, we will actually see that, in days or weeks to come, because now he's actually, very, very close to becoming president. I think what's interesting is that he saw what happened, in his campaign in 2019, and Indonesians were embracing of that fiery, rousing Prabowo. They want a leader, who can calmly and in a more measured way, just like Jokowi did, lead the country towards better economic prospects.
We talk about Jokowi. Of course, Jokowi played a huge part. Some say that Jokowi's popularity meant 20% additional votes for Prabowo. Talk to us about the significance of Jokowi, how he's become so powerful, and how he is likely to continue to play a role.
I mean, if you remember, you interviewed President Jokowi last year, and towards the end, you asked, what are your plans, after you stepped down in October, and he was like, I want to spend more time with my family, play a bigger role in environment, but then he also said plans might change. And I do think his plans have changed. What you saw in the presidential election that concluded yesterday is, number one, the Jokowi outsized influence. And I think it answered a lot of, the critics' questions that he's indeed bigger than his ruling party. Because, for years, the ruling party has mocked him, have questioned him that he wouldn't be where he is without them. But he showed, and also, his contribution to the votes to Prabowo. I mean, he secured close to 60%. That was higher than what Jokowi got in the last two victories in 2014 and 2019 when he won the presidential post. It also shows that Indonesians want the path that they're on right now, more pragmatic, more focused on economic growth, less of a instability, and because Prabowo promised all that he will continue Jokowi's policies, there wouldn't be a massive departure or deviation. People want that. And the third point also, adding to the Jokowi factor, wanting continuity, it is also because maybe Indonesians do not see the alternatives, the rival candidates, as inspiring enough. And so why break it? Why fix it?
Exactly. When it's not broken, it is about jobs, it's about the economy, it's about continuity in policies. There you have it. Faris Mukhtar covering the Indonesian election along with our team here. And of course, we're awaiting the official results to be announced in a couple of weeks, hopefully. Paul, Heidi?
Our chief international correspondent for Southeast Asia has Linda Amin there, our Indonesian government reporter Faris Mukhtar, really dissecting the result of the Indonesia election, or the preliminary results from the quick count that we have so far. Our live coverage, of course, of the Indonesian election continues today. We'll be speaking with guests, including from the Prabowo campaign team and a former Indonesian trade minister. This is Bloomberg.
Ford Motor says low-cost Chinese electric vehicles are a colossal strategic threat that will ultimately arrive on US shores. For more, let's bring in auto reporter Keith Norton. So, Keith, why does Ford see China EVs as a threat?
Well, they have a huge cost advantage, Paul. The BYD Seagull, for example, costs $11,000, whereas the average price of an electric vehicle in America right now is $60,000. So the worry is that they'll come in and undercut everyone on price and really kind of take over the market.
Why are we also hearing that Chinese automakers are looking at building EVs in Mexico?
Right. So President Trump, during his administration, imposed a 27.5% tariff on Chinese-made EVs if they were imported directly to the United States. So China's finding a workaround. BYD is apparently looking for a factory site in Mexico. Several Chinese suppliers have already set up shop in Mexico. That way they can come into the United States through the USMCA trade agreement, which means there'll be no tariff. And so that is the way China is kind of backdooring into the US market.
Yeah, we've got some involvement from Tesla here as well, encouraging Chinese auto suppliers to set up in Mexico. What's happening there?
Yeah, so, Tesla, you might recall, has a giant factory in Shanghai, a gigafactory there. It's how they've really penetrated the Chinese market. They have a great group of suppliers there, so they're encouraging those suppliers to come to Mexico, where Tesla's building another new gigafactory to build its low-cost model. And so those Chinese suppliers are coming and setting up shop around that factory, and that's just building the Chinese auto supply base in Mexico, which is really growing.
Bloomberg's Autos reporter Keith Norton there. in Detroit. Take a look at how futures in Europe are opening up at the moment. And this as we see a little bit more of a recovery and uplift in the Asian session. So potentially a bit of a positive handover as we get into the start of trading in Europe. We did see an advance in that Wednesday session after the slide on Tuesday. We saw the UK benchmark outperforming on these bets that the BOE will deliver on rate cuts. European futures from Germany to the Euro Stoxx 50 looking pretty positive right now. This is Bloomberg.
All right, you're seeing live pictures of Sydney Harbour, rather murky day here. We are awaiting the unemployment numbers for the month of January. We do have the Aussie dollar looking fairly stable ahead of that. These are normally on time and they're a little bit late today. The expectation is for the rate to pop up to 4%. If that happens, that would amount to a 2-year high. We have heard from the RBA recently saying that it does see the labour market remaining tight and the central bank here not ruling out further tightening. We're seeing the Aussie dollar there dipping lower, which does suggest we are perhaps going to see a bit of a move here in the data. And yeah, we've got the numbers just dropping now. An employment change of, well, this is a revised employment numbers for the month of December. We're getting this coming in backwards at the moment. Contraction of 62,000 jobs back in December. That is an improvement on the 65,000 job contraction that we saw that month, but we still don't have those January numbers. But you do see there the Aussie dollar edging lower, 64.82 against the greenback at the moment. Let's just see if we can look elsewhere. We've got the jobless rate actually ticking up a little bit higher than expected. We're getting those numbers now to 4.1%. So that's going to really change the dynamics for the Reserve Bank. That is a much higher reading than we were anticipating. And it does suggest that market pricing's probably got it right, that the next move from the RBA is going to be down. Full-time employment change, also getting an old number there. Employment rising, 11,000 jobs for the month of January. Full-time employment up. The participation rate, that's declined slightly. The number of people in work or looking for work now 66.8%. But the headline there for you, the unemployment rate ticking up more than expected to 4.1%, and the Aussie dollar losing a little bit of ground. Now later on, timely that we get these numbers, we will be speaking with the Managing Director and CEO of Wesfarmers, Rob Scott, on the firm's latest earnings. Wesfarmers is the biggest employer in Australia, so it'll be interesting to get his view on the jobs numbers and outlook as well. You can catch that interview 12:30 p.m. Hong Kong time. Heidi.
Yeah, let's take a look at how all of this is playing into markets. And that miss when it comes to the jobs numbers that you just went through, Paul, really having a play when it comes to both equities as well as FX trading. We're seeing equities, the ASX 200 extending that gain to almost 1% after that jobs data. We also see that pullback in the Aussie dollar as well, giving back some of that earlier strength that we saw as the jobs numbers misses estimates. We have also been hearing from the RBA governor this morning as well, talking about inflation expectations being really well anchored at around 2.5%, but flagging the concerns about them becoming unanchored and some of those downside risks, including the Chinese slowdown as well. So on the balance of things, this potentially gives market expectations a little bit of a push that perhaps will have a softer than expected approach when it comes to the risk of further hikes from the RBA, and perhaps more pricing when it comes to sooner and more rapid easing in this part of the world. This is what we're watching when it comes to the rest of markets trading at the moment. Japan, we're still a couple of percent off from that 1989 high that we've been really waiting for, and now potentially that is further complicated when it comes to the Bank of Japan side of things, with the economy, with that GDP number that came out earlier in the hour showing that the economy has slipped into recession. That path to policy normalization may be a little bit more complicated going forward. We're also watching some of these movers in terms of Sony, in fact, falling the most in a year after cutting that PlayStation 5, and as well as that revenue outlook there as well. Some restructuring within the group not helping the investor reaction to that outlook, in particular, 7.8% lower, the biggest intraday fall since February 2022, after the company trimmed its revenue forecast. As sales of the PlayStation 5 came in roughly 1 million units lower than expectations. Also watching some of these other names in Japan, including the likes of Rakuten. That's one of the outperformers, jumping on the segment profit coming through from internet services in particular, raising that profit forecast. Let's get more now on the as yet unofficial Indonesian election victory for the Defence Minister, Prabowo Subianto. Let's get back to Jakarta, where Haslinda Amin is with our next guest.
Well, Heidi, now the question really is what a Prabowo presidency would mean. How would policies look like with him at the top? Let's get insights, perspective. Douglas Ramage, Managing Director at Bauer Group Asia Indonesia, joins me here in Jakarta. Good to have you with us.
Thank you.
We meet every 5 years, no?
Nice to see you again.
60% endorsement. I mean, what does it say?
It's an extraordinarily strong mandate, to be frank. It's significantly outside all of our forecasts, but it's fundamentally stabilizing. The strong sense is, let's just get on with things. Voters wanted continuity. They wanted one round. The business community was happy with one round. So it's a vote for continuity from Indonesians and, frankly, from the business community as well.
You know, in past elections, it was about ideology and people were debating fiercely, but not this time around. Why not?
Not this time around. And what's so striking, Haslinda, about this election, the foreign business community would have been just fine with any presidential candidate, because the correct assumption was they were all supportive of the pragmatic moves that Jokowi administration has made to improve the investment climate. No one is saying that Indonesia has an alternative path to development. So in that sense, any outcome would have been just fine.
The focus now would be on his cabinet, in particular, who the next finance minister would be. How are you looking at it? Because bear in mind, PDIP still leads. It's very popular, and I think Prabowo would be under a lot of pressure to bring everybody in.
Well, I think that a President Prabowo will have the same desire to bring as many of his potential foes into the cabinet as possible. The same decision that Jokowi made after his first 18 months. He was a minority president, remember, Haslinda, when he got elected, couldn't get much done, and he ended up with what Indonesians call a fat cabinet. So bring in as many players as possible. It's fundamentally stabilizing. And it also sets up expectations of essential continuity in terms of overall policies. However, make no mistake, President Prabowo will be his own president. He's not going to be simply a third term for Jokowi.
But what does that mean?
I think it means broad continuity in terms of emphasis on infrastructure. I think a significantly expanded emphasis on social welfare and human development. And this is going to be extraordinarily expensive. So Pak Prabowo is on the record throughout the campaign with very explicit promises of very ambitious and expensive projects that he wants to implement to improve Indonesian welfare. We're going to have a somewhat different fiscal approach to that. Probably Indonesia will need a bit less obsessive focus on its 3% deficit limit that it's imposed on itself virtually since the Asian financial crisis.
How should the international community, international investors look at this? I mean, when you take a look at Indonesia, it is important, it is significant because of the resources it has. It's one of the biggest exporters of everything from coal to nickel.
Yes.
And we've seen how a ban on nickel, for instance, drove prices higher.
Yeah.
I mean, what impact would Prabowo have on that aspect of Indonesia?
So specifically on the minerals and mineral mining exports, I think it's now a given all policy elites, including those in President-elect Prabowo's team, the presumed President-elect Prabowo's team, would be supportive of the so-called downstreaming policies. A notion that you shouldn't just dig up Indonesian minerals and export them without adding value domestically. Every member of the political elite supports this position. Why? Because they look back at the last 5 years and they see that it's delivered success, that there has been more incoming domestic investment focused on the downstream industries. Foreign investors don't necessarily always like it, but they've found a way to make it work.
How do you see Prabowo navigating Indonesia's relationship with the US and China? Some say, Prabowo win is a China win. And if you consider the possibility of Trump coming back in power, how might that look like?
So I think, Haslinda, I think under President Prabowo, my sense, it's absolutely not a win for China. It's not a win for anyone except him, his coalition, and hopefully Indonesia. He will be immensely pragmatic, continuing a long Indonesian tradition. Indonesia wants to have balance in its commercial and foreign investment relationships, as well as in its international political and diplomacy relationships. So we can expect that, if anything, President Prabowo will be somewhat more skeptical towards geopolitical concerns in Asia Pacific. Remember, as defense minister, he was responsible for the largest military exercises held on Indonesian soil since World War II that involved American, Australian, and other so-called allied troops. So I think we can expect probably a warm relationship with the United States and a continuing warm relationship with China as well.
Not to mention that Prabowo, as defense minister, bought a lot of U.S. jets.
Yes, canceled a major purchase of Russian weapons, actually.
Yes. Douglas, thank you so much for your insights today. Douglas Bauer there, MD at Bauer Group Asia, Indonesia. Well, Heidi, we all await how that presidency of Prabowo would look like.
Yeah, as we, of course, wait for official results, which may be a couple of weeks yet, Paul, all the focus is really on what the next period of reform, the post-Jokowi era, will really look like. That was Haslinda Aman there in Jakarta. We'll, of course, be continuing our coverage of Indonesia's elections, the implications for investors throughout the course of the day, speaking with the Prabowo campaign team, as well as the former trade minister, and the reaction from Schroeder's Indonesia. Former US President Donald Trump is said to be considering scaled-back commitments to some NATO members as he attempts to return to the White House. Sources tell us Trump is also looking to get Ukraine and Russia around a negotiating table. Bloomberg managing editor Derek Wallbank joins us now for more. And Derek, we're starting to get sort of an idea of what, a Trump foreign policy 2.0 will look like. And to be fair, a lot of the criticisms he's made of NATO could be seen as fair.
Yeah, I mean, there is a 2% of GDP spending target that NATO allies have committed to that, if I'm being honest, many of them don't meet. And it has been a source of concern within the alliance, I think, for a long time. The U.S. puts up the bulk of the funding for NATO, generally speaking. But I think that a lot of countries you saw sort of more around like 1.4, 1.5%. That started to change after Russia's initial invasion of Crimea, and you started to see that tick up. Donald Trump, during his presidency, made this threat, made a real big deal of the idea of getting people up to 2% and said he was going to rethink. You saw a lot during the Trump presidency about making big, grand threats to try and spur actions with potentially cataclysmic consequences. There usually was some resolution well short of that, although there were some instances where he followed through with some of those threats, launching a trade war with China being a great example of this. But this is sort of more for the same here. Now, the alliance overall, as I say, has gotten more spending on the table, particularly on its eastern front. However, a lot of the allies on the western side of the alliance still well short of those targets. I should also mention that Trump's remarks on NATO have been met with criticism by the Biden campaign, which says that he is insufficiently committed to the NATO alliance in ways that are helping Vladimir Putin and Russia right now at this moment with the war in Ukraine.
Yeah, Derek, some pretty serious questions about potential President Trump's commitment to Ukraine as well. He's talking about bringing an early end to that conflict with Russia. How does that come about?
Well, and Paul, and I think you've got to read this in context of all of the remarks that Donald Trump has been saying about the conflict full stop, right? Democrats and some Republicans had been wanting to give a lot of extra assistance, $60 billion plus to Ukraine in terms of military aid, but that's been held up by Republicans loyal to Trump who have been resisting on that. So Trump is trying to figure out a way to bring this to a conclusion, but if he were to do that at that point, the counter argument goes that would be doing so when Ukraine would be more at a moment of weakness rather than at a moment of strength, being able to push back more forcefully against Russia. So there are some concerns there about how that does, and also sort of how you would get this together as well, right? Ukraine has said that the conditions for victory are all of their lands back, including some of the things that Russia took earlier in the last decade, which we're not particularly close to, whereas Putin has his own objectives. How do you even get that closer to the table? I think there's a lot of questions there, but for sure, the biggest question, if you were to get towards a pushing for talks, is at what positions of relative strength do those talks come, and how does that actually get there? Donald Trump has said a lot of things, though. I think one of the bigger points I would make here, he said a lot of things, and you do start seeing the world taking him a little more seriously now that we're moving close to an election where polls say he is, at worst, a coin flip's chance away from returning to the presidency.
All right, Bloomberg's breaking news managing editor Derek Wallbank there. Okay, we have plenty more to come on Daybreak Asia. Stay with us. This is Bloomberg. Japan's economy has unexpectedly contracted for a second straight quarter, so we have a technical recession, and this rather clouds the BOJ's path towards ending its negative rate policy. Let's get more on this with our Japan eco and government editor Paul Jackson in Tokyo. So Paul, that wasn't in the script. What's the path ahead for the BOJ?
That's right. This is not the result anyone was wanting. This is the perfect headache for the BOJ. After all, this carefully coordinated build-up to this first interest rate hike since 2007, and then just as you're expecting the green light to come on and say go, it stays red, and not only that, it's worse. Now just think about this. We've got 34 economists gave us their forecasts for GDP. Only one said there was a chance of contraction. There's quite a few around zero, but only Daiwa Securities called a contraction in that quarter. So we're in technical recession. Which central bank in the world wants to raise interest rates when the economy is in contraction, is in recession? It's not a good look, is it? So the optics are not great, but I would caution against saying that this means, okay, no rate hike until the summer, until we've got a quarter of growth. I think we're still on track, but obviously this does complicate the picture. And if we look at overnight swap data since the figures came out, we'll see that the kind of probability that market traders have for rate hike by April has dropped from about 73% to about 63%. Let's just keep an eye on how expectations change. But certainly, I think the BOJ is going to have to do a lot of explaining if it wants to carry on with its rate hike with an economy in recession.
Is there some angst with dollar strength and yen weakness too? Does that complicate the outlook? Because, you know, it's an easier way to give support to the yen if they were to move sooner.
Yeah, well, I mean, if they move sooner, that does help the yen. But then, you know, you've been doing this incredible monetary stimulus project for more than a decade. Do you really want to be looking as if you're responding to some yen moves right at the last minute? It looks like a kind of knee-jerk reaction at the wrong time. So I think the optics don't look good for that. And don't forget that the weekend does help on the trade figures. And let's face it, that's the only thing that was good in the results today. I mean, consumption's down, businesses are spending less, households are spending less, and it's for 3 straight quarters. Does that look like a positive growth cycle to you? Doesn't to me.
At least the markets are still going gangbusters, right? Thanks. Weaker yen. Our Japan and Korea economy and government editor Paul Jackson there in Tokyo talking through those really pretty surprising GDP numbers, a recession for Japan. More ahead on Daybreak Asia. This is Bloomberg. Chinese shares listed in the US made gains amid a broader market rally, a potential sign of upside for Chinese equities. Let's get a preview of the market open in Hong Kong. Our Asia equities reporter Charlotte Yang joins us. And you would be very optimistic indeed to be pinning your hopes on a follow-through, translating into any kind of permanent boost to sentiment here.
I think so. For the real show begins next week when the onshore market resumes trading. So for Hong Kong, at the moment, traders are really what they really trying to grasp is this consumption data we got so far. About the first few days of Chinese New Year, and yesterday, we saw a boost in the tech shares with Meituan, some others showing positivity there. And today we're closely watching the hotel stocks, where Chinese state media, CCTV, has reported some order growth. More than 60% on year, and we're also watching the airline stocks, which Citigroup says is showing the air travel is showing a stronger recovery momentum, than if we compared with the Golden Week last year. So the consumption stocks we're closely watching, and that's for sure for today's trading.
Charlotte, of course, foreign investors very cool on Chinese assets at the moment. Can you give us a sense of what the short interest is looking like?
Yeah, so we are seeing that, so a lot of the financial products providers are also grappling with investors' changing appetite, for Chinese equities. And we saw Direxin last week just issued a leverage emerging market-focused exchange-traded funds that exclude China. And this comes as last year, the top-selling EM ETF is one that from iShares MSCI emerging markets that includes China. So a lot of the investors at the moment are choosing to stand on the sidelines and investing in EM, but exclude their China position. And for the more China-focused fund managers, at the moment they're going defensive and going after those more dividends-focused stocks at the moment until they said that they see more fiscal policies that support the real estate sector, as well as we see what kind of more supportive measures we could come from the securities regulators. So a lot of the investors are watch and see at this stage.
All right, Asia equities reporter Charlotte Yang there. Okay, let's take a look at some of the stocks we're going to be watching when markets do open in Hong Kong in a little over 30 minutes' time. Tech stocks, we'll keep an eye on them after gains in Hong Kong on the market's return yesterday from the Lunar New Year holiday. Manulife's Hang Seng listed shares in focus after fourth quarter profit beat analyst estimates. Were boosted by strong insurance sales in Hong Kong and Canada. And Ping An Insurance is one to watch as well after being cut to sell by CLSA.
And Paul, we were just talking through this a bit of a shock when it comes to those labour market data, the numbers out of Australia. We're seeing that reaction in the slide. In yields here in Australia, we saw hiring edging up, but unemployment climbing to that 2-year high. So really a little bit of a signal of Australia's cooling labour market and prompting bets of an earliest interest rate cut as well. We saw declines in the Aussie dollar, Strops traders really bringing forward bets on that first rate cut to September from November. We're seeing 3-year sovereign bonds sliding after the data came out, extending that opening forward down, just about 9 basis points there. Bond futures for the 3-year jumping as well over 10 basis points. The 10-year yield falling about 9 basis points there as well. The Aussie dollar holding pretty steady at this point, just hovering sort of around that 64 level. We saw the RBA last week holding the key rate at the 12-year high, and perhaps this weakness in the labour market prompting expectations that easing will come sooner rather than later. This is Bloomberg.